morning. Welcome to IG's early morning call. It's Wednesday, the 8th of November. Let's take a look at the headlines as we wait the start of today's European session. We're taking a look, first of all, at the renewed strength of the US dollar. It's up once again on hawkish comments coming through from some Fed speakers, some leaving the door open to further interest rate rises. Although we still see a 4.5% print for the US 10-year Treasury, we have seen the dollar appreciate for the third day in a row. European indices, we are expecting a slightly lower start to the trading day across the markets on the session. We've got this small retracement going on after last week's traded performance, the best this year, as we saw interest in equities rise. And we've seen volatility fall over the last few days, but it is ticking up a little bit in today's session. And we're witnessing a 3-month drop to the price of oil. Weakening demand concerns outweighing the potential geopolitical issues that are stalking the Middle Eastern supply disruption or process at the moment that we've got, and expectations are this could well increase, which might mean we could well see a return to some sort of growth. But nonetheless, at the moment, it's all about the destruction, the potential destruction of demand. Let's take a look at volatility, talking about this drop that we've seen. This 7 days in a row of declines, taking us down yesterday intraday to the lowest point we've seen since the 20th of September. Today we've got a little bit of an uptick, but really it's not that much. And this really goes to show this move around that we've got in the equity markets at the moment, where we've seen this retracement. It's not as well pronounced in this market as it is in some others, but we saw that big rise that we saw yesterday culminating in that really big strong candle on Thursday, and the highs on Friday. Then came the reversal, and we've got this drop at 73.90, expecting a lower start to the trading day across the London markets in the session today. Same sort of trade on the German markets. The retracement can be seen after those gains that we saw going into the back end of last week. And it's the same for many of the European equity markets. The French CAC 40, the fourth day in a row of losses. Now the 24-hour markets looking for a lower start there as well as we approach this line of support at 69.46. Let's take a look at what's been happening overnight in the Asia-Pacific markets as we see losses there begin to pick up again. Although in some of the markets, it's not really as bad as some had been fearing. A third of 1% down on the Nikkei. Hang Seng stock index in amongst the decliners. S&P ASX managing to see a gain as at the close in what was overall a mixed trading day. S&P ASX up 0.25%. Let's take a look at what's been happening as well on Wall Street. Yesterday we saw gains across the board, not by a massive margin so far as the Dow was concerned, but the Nasdaq was where the money was going in the session yesterday. And you can see clearly here, if you look at the chart in yesterday's trade, we were up actually at levels. We saw a break of that high intraday, albeit very, very briefly, to take us there intraday yesterday to levels not seen since the 15th of September this year. But a little bit of a break on the progress that we've got at the moment. But as I said, the Dow was the market where we've seen a little bit of an underperformance yesterday in terms of the upside. But nonetheless, we saw an intraday strike higher on markets not seen since the 21st of September. So it wasn't all bad news. And in fact, it wasn't bad news at all when you consider the gains that we've seen. The markets, generally speaking, holding on to much of what happened. Microsoft closed out yesterday's session at a record high on more hopes for artificial intelligence, which have been driving some of these companies involved in that. And a whole host of businesses that have AI exposure was up yesterday on the back of this news from Microsoft that it's continuing to benefit from this move into AI. Now, let's take a look in more detail about what's been happening in terms of some of the moves on the dollar market, because after losing ground last week, the US dollar is seeing some appreciation this week. It's up for a third day, actually. Yesterday, the greenback found support in a series of central bankers' comments, which have turned, interestingly, more hawkish again. Let's take a look at what's been happening with the dollar basket after the losses that we saw last week, going into the lows on Friday. And we saw that non-farm payroll print, of course, coming through on Friday as well, softer or somewhat more market-friendly than had been anticipated. And then this week, we've seen this now third day in a row of gains for the dollar. The Fed speakers today include the chair, Jerome Powell. He's speaking before the Federal Reserve Division of Research and Statistics Centennial Conference. And it'll be interesting to see what he has to say. In terms of the moves on where we are, let me just take a quick look at what's happening. This is sterling against the US dollar, down for a third day on the trading day today. I want to look at what's going on as well with the European Union single currency against the US dollar, because this is the major cross This is now, as I say, again, the third day in a row of losses after that big day on the upside on that dollar weakness on Friday, currently trading at 106.81. As I said, the attention will now be very much on what happens today with that speech from Jerome Powell. Staying on the charts, the effect of all this has meant we've got money coming out of the US dollar. Today, it's the third day in a row of losses. This is a pullback in what had been a particularly strong move up from the lows back on the 6th of October. And indeed, it's not just gold as well, it's palladium, it's also spot silver as well, where we've got some of the big moves in these moves on the markets. In today's session, the lowest print we've got there since the 17th of October for the price of silver. So as the money goes into the dollar, it comes out of some of these, well, particularly precious metals. Now, let's take a look at what's happening in terms of some of the corporate news headlines. One of the stocks I guess we'll be talking about after the close this morning in terms of some of the moves will be Marks and Spencer. It looks pretty good if you look at the first half numbers, but the company's cautioned that the second half could well be likely to see some weakness because of uncertain economic outlooks, challenging comparative numbers. Consumers finding them going increasingly tough as the year continues. Profit before tax and adjusting items was up 75% to 360.2 million. Food sales up 14.7%. All these numbers sound really, really strong. Clothing and home sales up 5.7%. Ocado retail was where the area I think of concern is lying. Share of adjusted loss has expanded from £700 million, £700,000 down to 23.4 million. So that's the Ocado Marks and Spencer's share of adjusted loss for its joint venture with Ocado Retail. And it goes on to say Ocado Retail has already generated significant volume growth and buying benefits for M&S Food. But then it says, this is the crux, I think, here, and this could well be why we see shares down at the start of today's trade. Ocado Retail, the potential of the venture has yet to be realized. Was it a mistake to go into bed with Ocado? I don't think it was necessarily. It's just a question of fine-tuning this to work out precisely what's happening. I've drew this blue box on here from the lows we had, or rather the beginning of this year, right the way through to the highs we had on the 29th of September, 91.3%. So this is just a retracement in what has otherwise been a really, really strong year for Marks and Spencer's. In the context, it's not been quite as high as we've seen back on the 11th of January, where we saw that print at 263 pence. The stock will open at 224.1 pence when shares get underway at the top of the hour. Another one worth watching is ITV, posting a 1% increase in total revenue for the first 9 months of the year. There's some concerns about the outlook as well around advertising, but the group adds that lower demand from free-to-air broadcasters for its content will impact its studios business in the fourth quarter, resulting in the growth of around about 3% for the unit in 2023, down from its previous mid-single-digit forecast. Streaming business ITVX continued to perform strongly. This goes in line with people moving into the likes of Netflix. They prefer to go on streaming. They prefer to choose what they want to see rather than go into the scheduled broadcasts that we are now thinking is old TV. Total digital revenues are up 23% on ITVX, showing that people are preferring that maybe rather than the scheduled TV normal service. Total streaming hours are up 27% through to the end of September, and with monthly active users continuing to grow in line with expectations. The company says, though, challenging advertising environment as well as the US writers and actors strike, the latter is expected to defer revenues from 2024 into 2025. So that is something that's a big headwind, I think, for a lot of these broadcasters, this strike. And you can see here, if you look at ITV, has seen the going tough recently. And as of the lows that we saw in the last couple of weeks, down at 61 pence, the stock will open at 65.6 pence. This line of support, I think, is going to be in view. If you're short on this, your stock goes up here just over the 69 pence level. 61.3 would be a price target if you're short on ITV going to the start of the day's trade. That would take you then down to levels not seen since the 13th of October 2022. Let's stay on the charts and take a look at some other companies worth looking at. JD Wetherspoon, just want to quickly take a look at this. Particularly strong current trading like-for-like sales in the first 14 weeks of the financial year, up 19.5% higher than the same period last year. Bar sales up 10.7%, food up 8.2%, slot and fruit machines up by 10%, people going gambling now. Hotel room sales increased by 6.2%. So this means a group like-for-like sales growth of 8.1% in the year to date. I don't know how that compares with other pub companies, but it looks good on paper for JD Wetherspoon. The company will open at 679.8 pence a share. If you're long on this, stock goes below the this red line down here at around about the 650 pence level. That will be a price target if you're long on JD Wetherspoon going to the start of today's trade. Not a trade recommendation, just a way I think the setup could be, bearing in mind the relatively strong statement that we've seen this morning from JD Wetherspoon. Let's travel abroad, take a look at what's happening with the sportswear manufacturer Adidas, which has come through with an announcement this morning. It says that inventory levels continue to drop in the third quarter and lower costs helping increasing gross margins, eating into these large stock build-ups that we've seen companies have like Adidas is always good news and always well received by the investors in the stock. Inventory levels were down 23% on the year to 4.85 billion euros. Gross margins up 0.2 percentage points to 49.3%, thanks to reduced freight costs and less discounting. I want to show you what's going on with Adidas. The sportswear maker will open at 171.88 euros after having gained recently, bouncing off the 200-day moving average. This is a slow grind higher, but it is nonetheless a move up overall since the lows that we had back in November last year at 94 euros. So at 171.8, we're more than double up where we were from the period where we were late last year, or up around about double, I should say, from 93.60. So Adidas looking good. Bayer announces this morning it'll remove several layers of management by the end of next year to speed up decision making. In other words, cost cuts. In other words, good news for investors. It also reported third quarter earnings before interest, taxes and depreciation and amortization of 1.68 billion. Now, that was down 31.3% on falling earnings at its crop science division, but it's nonetheless a little bit better than had been expected. A separation of either consumer health or crop science remains under evaluation for Bayer. Bayer will open at 41.78 after hitting recent lows in the stock. And in fact, let me just quickly go back to check on when we were last at these levels for the shares of Bayer, going down to those levels down there. October 2020 was the last time we hit that 39.90 level. We're opening at 41.78. I think the company's trying to do all it can to improve investor returns, and the business seeing a slight improvement in overall performance. 41.78 is where that stock will open this morning. Let's take a look at what else is happening. Munich Re, the world's largest reinsurance company, has reported a net profit of 1.17 billion euros. This equates to a 6% increase in the same period last year. Last month, the company had already reported preliminary figures saying profit would be around 1.2 billion for the full year. German reinsurer sees a net profit of 4.5 billion for the end of the year. Munich Re is one of these companies where you have to scrabble around a bit sometimes when you're looking for this business, because it's very, very much different from listed in the market than it is, as you would say it. It's Munich Re. 371.45 euros is where this stock will open. It's been benefiting from really good strengthening of prices in the insurance industry. We've seen a lot of insurance companies come through with hardening prices. And as a result of that, we've seen this stock not too far away from record highs we had in the shares back in October 2000 at 397.73 euros. So that's getting there, not too far away from the recent highs. Things looking good for Munich Re at the start, potentially, of today's session. I want to stay in the finance industry, but move over to banks, because Commerzbank has come through with third quarter numbers this morning. Net profit more than tripling in the third quarter. Things looking good there as well. Net profit up to 684 million, helped by higher interest rates, up from the 193 million we saw this time last year. Analysts had expected, on average, an expected profit of 611 million. So that's better than forecasted profits from analysts. Commerzbank has spent much of the past 3 years in a major overhaul, slashing its workforce and branch network to restore profits. This morning, Commerzbank management says it will reduce its costs to income ratio to 55% from 2027 and aim for a net profit of around about 3.4 billion euros in that year. So the company looking as though potentially it's produced enough good news today, possibly for the stock to be seen gaining. We're opening at 1038 in shares in today's trade, and the recent lows at 976. If you're going long on this at 10.38 euros, your stock goes underneath the 10 euro level, with a view potentially to taking that stock up at the beginning of today's session. I want to stay on the charts because it's worth looking at Credit Agricole, the French bank as well, in the session in today's trade. It's posted better than expected quarterly results, driven by strong performance at its investment bank and retail activities. It closed down yesterday at €11.57. Another stock potentially we could well see on the upside. In terms of the upside price to watch out for, we're opening at 11.57. 11.77, the highs that we've seen recently, and that would take us back to September the 21st this year if you see Credit Agricole also rise this morning. Third quarter net income jumping 33% from this time last year to 1.75 billion, above the 1.37 billion average of analyst estimates compiled by the company. So things looking good as well for Credit Ag. Let's take a look at what's happened on eBay shares, because late in the session in yesterday's trade, they slid by a margin of 5.4%. All sessions on the IG platform. That was as it forecast fourth quarter estimates below what the markets have been looking for. eBay has come through recently with some really disappointing share price declines. The stock down heavily in yesterday's session. Like a lot of e-commerce platforms recently, it sounded the alarm on weaker than expected consumer spending. High interest rates and stubborn inflation across major economies in Europe as well as the United States have further eaten into consumers' discretionary budgets. On an adjusted basis, eBay earned $1.03 per share. Now, that was compared with estimates of $1. So that's better than expected. Third quarter revenue rising 5% as expected, 2.5 billion. But it was the outlook that raised profit alarm concerns, and that's why we saw that big drop in shares yesterday. It says it now expects current quarter adjusted profit per share in the range of between $1 to $1.05 compared with an estimate of $1.04. So that's why we saw that drop yesterday, not too far away from levels not seen since October 2022 for eBay. Now, Disney reports its fiscal fourth quarter profits after the closing bell this evening. Could it all be down to streaming? Earnings per share, 69 cents, which is what's expected, which would reflect a sizable 100% recovery in earnings from this time last year. Revenues, $21.7 billion expected, up 6% from the quarter in the same period this time last year. Disney Plus subscribers estimate stand at 146 million, reflecting an 11% drop from this time last year. The company's fallen short of consensus Disney Plus subscriber expectations in back-to-back releases recently, snapping a previous streak of positive beats. But the Netflix results recently saw a substantial climb in shares because subscriber numbers unexpectedly rose substantially beyond forecasts. Now, what will happen to Walt Disney? Walt Disney shares have really found the going tough. And poor old Bob Iger, who took over with a great flurry of news and positivity back on this vertical dotted line here, back at this time last year, not too far away from where he's been there now, back a year. And shares have really been performing badly, recently hitting $78.75. The stock will open all sessions on the IG platform this morning at $85, and you can trade this after the closing bell this evening when the company comes through with numbers. Another all-session stock after the bell this evening is Lyft on its third quarter numbers. We will be seeing it report after the close tonight. Besides earnings, investors will be looking particularly at Uber's competitor Active Rider growth. To compete with Uber, Lyft has had to lower prices recently, and that's eating into margins, potentially affecting the top line as well. Earnings expected at 15 cents a share, roughly a 50% increase in the same quarter last year. Revenue forecast at 1.14 billion. They say Lyft is another all-session stock on the IG platform, and it'll open at 9 o'clock this morning along with all session stocks, and you can trade this after the close this evening. Now, let's move on to other areas of the market as we continue to monitor what's happening in some of the commodities markets. Just want to follow up on one other area where we saw some really big volumes yesterday, taking the price of oil down heavily in yesterday's session. We are up today, but only very, very small margin of gain. And we saw yesterday's trade storm below the 200-day moving average and the bottom of this Fibonacci. They're taking us through to these 3-month lows. Analysts agreed that the market's now less concerned by the potential for Middle Eastern supply disruptions, rather occupied by weakening demand. Data in China, the world's biggest crude oil importer, raising doubts about the demand outlook. China's crude oil imports remained robust in October, but its total exports contracted at a quicker pace than expected, adding to fears for lower global energy demand. Now, according to API, crude oil stocks rose 11.9 million barrels last week, according to the release yesterday. Gasoline inventories fell by 400,000 barrels distillate stocks rose by 1 million. And that's it. As we look ahead to the start of today's European session, looking for small losses across the board. Do watch out for Wetherspoons, which might buck the trend. And also Marks and Spencer on first half earnings, and that warning about the fact that Ocado hasn't performed as many at the business had hoped it would. A couple of stocks to watch at the start of today's European session here in London. On the German markets, watch out for Commerzbank and Adidas particularly, but also Munich Re. Some of the stocks to watch on this Wednesday morning.